So, let's talk about finance. It feels impossibly complicated, right? A whole world filled with jargon and secrets. But what if I told you it's all basically just a game of Legos? Seriously, stick around and you'll see exactly what I mean.
I mean, let's be real. The minute you hear about finance, you get hit with this wall of words. ETFs, swaps, crypto derivatives. It feels like a secret language that's specifically designed to make your brain shut down. But here's the secret. It's not nearly as intimidating as it looks.
Because what if I told you that all that complexity, every single one of those scary-sounding terms, is built from just 3 simple parts? 3 financial Lego bricks that, once you get them, lets you build and totally understand anything in that financial jungle.
That's it, just 3. Our source material calls them the financial atoms, and once you master these 3, you've basically mastered the fundamentals of finance. And to do that, well, we're going to need some hamsters.
Yep, you heard that right. To understand the complexities of global markets, we are diving deep into the high-stakes, action-packed world of professional hamster racing. Get ready for drama, for suspense, and for a whole lot of tiny, furry athletes.
Forget Wall Street. Forget all the complicated charts. Our guide to the entire financial universe is a league of tiny rodents running their little hearts out for glory. Trust me on this. By the end of our time here, finance is finally going to make sense.
All right, first up, bonds. So our hamster racing league is a smash hit. The crowds are going wild. There's just one problem. They need a brand new state-of-the-art stadium, and they're a little short on cash. This is where our first financial atom, the bond, enters the picture.
At its core, a bond is just a loan. That's it, a formal IOU. The hamster league is the borrower, and it needs to raise money from investors, who, in this case, are the fans, to build its magnificent new hamster drum.
So how does this actually work? Well, the league issues these hamster bonds to its fans. In exchange for their cash right now, the league promises 2 things. First, regular interest payments, think of it as a thank you for the loan, and second, paying back the original loan in full when it's all over. The fans get their money back, plus some extra, and the league gets its stadium. Everybody's happy.
Okay, the stadium is built, the league is absolutely thriving. But what if you want to be more than just a lender? What if you want to actually own a piece of this hamster-fueled action? Well, let's talk about our second building block, stocks.
A stock is exactly what it sounds like, a small slice of ownership. When you buy a stock in, let's call it Global Hamster Racing Inc., you're not a lender anymore. Oh no, you are a part owner. Your financial fate is now tied directly to the success of the business.
So, what makes your little piece of ownership valuable? Well, the success of the business. Are ticket sales booming? Is there a steady supply of sunflower seeds to keep the athletes happy and running? And, most importantly, do they have the fastest hamsters in the game? All of this drives the company's success, which, in turn, drives the value of your stock.
And right here, this is the key difference. With a bond, you're the lender. You get a predictable, fixed return. It's safe. With a stock, you're an owner. The potential reward is way, way higher. But so is the risk. If the league suddenly goes bankrupt because of, a catastrophic sunflower seed shortage, your stock could become completely worthless.
Okay, we've covered lending, and we've covered owning. Now for the third and final building block, options. This is where things get really interesting, because this is where we get to speculate. So let's imagine our league has a breakout star, a true once-in-a-generation talent named Fuzzy the Flash Ferguson.
You've got this gut feeling that the Flash is about to win the Hamster Cup, and when he does, the league's stock price is going to go to the moon. A call option gives you the right, but, and this is key, not the obligation to buy the stock at a price you agree on today. If you're right and the stock explodes, you get to buy it at the old cheap price and make a killing. It's basically a bet on the upside.
But what if you hear a nasty rumor that the Flash pulled a hamstring during a particularly dramatic training montage? You think the stock is about to tank. A put option gives you the right to sell the stock at a set price. So even if the real price collapses, you can still sell yours for that higher pre-agreed price. It's a bet on the downside, or a really clever way to protect your investment.
So really, options are all about making these incredibly precise bets. Their value is driven by these simple, almost beautiful formulas. A call option pays off if the stock price goes above a certain point. A put option pays off if it falls below it. It's a way to bet on a very, very specific thing happening.
And this is why they're so powerful. When you buy an option, the absolute most you can ever lose is the small price you paid for it. That's your total risk. But your potential profit, if you're right about the Flash winning that championship, well, that could be massive. It's limited risk for a potentially huge reward. That's the whole game.
So there you have it. We've loaned money for a stadium with bonds, we've bought a piece of the team with stocks, and we've placed a very specific bet on our star player with options. Now, let's just zoom out and put it all together.
First, bonds. They are the foundation of everything. They represent stability, and they basically tell us the cost of borrowing money over a period of time. Almost everything else is priced relative to that.
Second, you have stocks. These are the engines of growth. They represent ownership in the productive parts of our economy, like, say, a wildly successful hamster racing league, the parts that actually create real value in the world.
And finally, options. These are the tools we use to manage and, yes, speculate on the future. They give us a way to handle all the uncertainty, all the what-ifs about what might happen next.
Stability, growth, and uncertainty. Bonds, stocks, and options. That's it. That's the whole game. Remember that crazy financial jungle we talked about at the very beginning? All those scary-sounding things like ETFs and swaps and structured notes? They're all just different combinations of these three core ingredients. An ETF? Just a big basket of stocks. They're all just recipes using these three simple building blocks. So now you know the financial atoms. The only question left is, what are you going to build with them?